Hello everyone, we are Group 1 and we are going to present our topic. China is experiencing a 1980s style Japanese bubbles. So we will have a discussion through these three aspects. And in the early 1980s, Japan's economy was booming and production capacity transformation began. This made Japan become a major exporter. However, in the late 1980s, Japan experienced a bubble economy, which is described as the rapid growth in the market value, particularly in the housing price. So let's have a look what happened to Japan economy. So I'm going to follow this flow to introduce Japan bubble economy for better understanding. Well, Japan's economic momentum in the 1980s has naturally become the best choice for international hedging funds. How to ensure the absolute safety of safe haven funds? Well, the famous Plaza Accord explained this, and the agreement of Plaza Accord in 1985, which sought to depreciate the US dollar against the yen, which means the relative yen will continue to show rapid appreciation. Well, in the just 3 months after signing the Plaza Agreement, the Japanese yen appreciated 20% against the US dollar. Due to this change, it affects three aspects, which are net export, Nikkei index, and the money supply respectively. And the appreciation of the exchange rate remains favorable to imports, which in turn will restrict exports. At that time, an increase in the exchange rate made the net exports decreased, and also the Nikkei index reflects Japanese stock market and the performance of Japanese overall economy, which had grown 4 times through the 1980s. Subsequently, with the appreciation of the yen, domestic and international investors are flocking to the Japanese market and hope it will yield more. And there is increasing foreign capital inflow. So the Financial Foreign Exchange Reserve wanted to maintain confidence in the financial market, and the central bank applied the expansion monetary policy to increase the money supply of the yen to achieve balance between currencies. After that, the discount rate decreased from 5% to 2.5%. And the decreased interest rate was a key promoter in increasing property price due to the growing demand for the loan from financial institutions, not only for the individual but also for the company. And initially, for individual, mortgage interest rate tend to be lower compared with other borrowings, and lower interest discount rate can make the borrowing become cost effective. Secondly, for the company, the enterprise borrowed the loan for land acquisition for commercial use, so various investors were rushing into the real estate market, which boomed the housing price. Consequently, the debt sharply increased from 165% of GDP in 1986 to 220% of GDP in 1994. And the increase in housing price began in the commercial areas of central Tokyo and spread to the business and residential areas at the outskirts. And the rise in the land price reached a peak in 1987 in central Tokyo. However, the fluctuating and high asset price reveals that Japan experienced irrational experience in economy. However, according to the figures, they did not make the majority contribution of natural economic activities. Therefore, the graph of real GDP growth rate which showed a downward trend, and the bubble became bigger and bigger. Well, as the property industry maintains a sustainable growth, the Japanese government are soberly aware of the huge crisis. Therefore, the Bank of Japan applied a tight monetary policy and began to decrease the money supply and raise the interest rate in order to restrain the asset inflation. So let's welcome my group mate to introduce the remaining part.
Okay, so I will explain China's situation by these following aspects. So firstly, let's talk about the currency. Similar to Japan, China also experienced currency appreciation pressure from the other country. China reformed market-oriented exchange rate in 1994, where government act as a banker in the market that makes sure the float is limited in a specific range. In 2003, the US has persistently pressed Beijing to allow the RMB to appreciate. During 2005 and 2014, the government expanded the upper and lower bands to 2%. Both U.S. pressure and China's own goal to rebalance its export-dependent economy call for further currency appreciation, and therefore it is likely that China will continue to appreciate the RMB. Similar as Japan, net export of China also experienced fast growth first and dropped significantly during the decade. The net export grew rapidly, particularly after the accession of WTO in 2001. From 2003 to 2007, the export and import both increased a lot. One example of the trade policy impact is the expiration of ATC in 2005, contributing to the dramatic increasing of the export. However, the net export have fallen greatly by 40% due to the financial crisis in 2008. Another factor is that since RMB gets stronger and domestic goods become more expensive, and hence export would decrease and import would increase. Money supply in China has increased dramatically from 2003 to 2014, which is quite similar to the increase of money supply in Japan in 1985 to 1995. In China, especially after 2008, the slope of money supply has become steeper, which means Chinese central bank has used expansionary monetary policy to stimulate the economy. And overall, money supply in China has increased sixfold in 10 years period of time. For the growth rate of money supply in China, it is clearly to be seen that the growth rate has reached its peak in 2009, and then the growth rate goes down. The main reason behind is in 2008, China has experienced a global financial crisis. Net export has gone down. In order to prevent unemployment rate and to keep GDP goes up, China has increased a huge amount of money supply to encourage people to invest. But this would cause a bubble in some fields such as the property market. After 2009, the government wants to curb inflation and therefore tighten the monetary policy to reduce the growth rate of money supply. Consider nominal interest rate has decreased after 2007, which matched the fact that when the money supply started to increase, the interest rate would go down. The reason behind that is after 2008, due to the impact of financial crisis, the U.S. issued more U.S. dollars. The impact on China is the false appreciation of the RMB. Because China is an export-oriented country, once exports are going down, the impact on the economy is immeasurable. The response is forced to reduce interest rate and make RMB less attractive to offset the appreciation of RMB. This will help to save Chinese export. We can now look at the data and sum up no matter whether the house debt to GDP or government debt to GDP. China and Japan has all increased in their respective 10 years periods of time. For this part, we will know about whether the growth of productivity can match the growth of bubble. From the left graph, real GDP is still increasing from 2003 to 2014, but the growth rate of real GDP decreased constantly from 2007, shown in the red curve on the right graph. China has followed a similar trend in Japan, which are both represent a slow increase in economic activity. Next, we will focus on the economic growth from the human perspective. GDP per capita with threefold growth from the year 2000 to 2013. But the growth rate of GDP per capita was just increasing for the first 4 years and then decreased constantly. The trend of GDP per capita growth rate is also similar to Japan's. Next, we want to figure out the problem that the decline in real economic activity. The decline in China's work age population is the first issue for the problem. The one-child policy, which promoted in 1979, that has influenced Chinese workforce population, shown in the red curve from the right graph, become peak before 2015 and declining similarly to Japan in the blue curve. This is also a symbol of lack of energy to boost productivity enough to maintain GDP growth. Next, we will also consider the technology and the innovation that maintain the profitability of the company. Even the labor force is decreasing. To figure out this issue, total factor productivity should be used to measure all factor productivity. Production is decreasing and remain on 1. The growth of TFP decreased from 2005, which also represents that all factor productivity is declining and China industrial transfer is not ready to compensate for the loss of demographic bonus. So, my groupmate will continue to talk about stock market and property market behavior for both countries. Let's welcome.
Hello everyone. Well, for the index market, comparing to Nikkei index of Japan from 1987 to 1992, stock market in China from 2006 to 2008 had a similar trend, a sharp increase and then dropped quickly with key similar reasons. At beginning, the appreciation of local currency attracts a lot of overseas capital investment. Besides, lower interest rate and monetary expansion policy influence local capital, so people do more investment in stock market. That makes the index of China and Japan increase, and after the overseas capital leave, the stock market dropped quickly. The Japan stock market faced a very big challenge in 1990, and the same situation happened in China in 2007. For Chinese property market, after government set property as pillar industry to hit economy, the main reasons of Chinese property bubble are government control on preferential and taxes policy, lower interest rate adjustment, and speculative behavior in purchase. That means people borrow more mortgage to buy house and expected to earn profit. Let's have a look at the whole country average housing price. Besides the hit of financial crisis, the price increased all the time, especially faster from 2009 to 2012. The price was driven by increasing demand, as under the preferential policies and low interest rates, people like to borrow to purchase house. We have a very important ratio to show the purchase power of residents, that is the housing price to income ratio. Comparing to world average level, if the ratio gets higher than 6, meaning a bubble in housing price and most people hardly afford the price. The ratio increased fast to 8 when property economy was overheated and then slightly fluctuated as government started to cool down the price and demand. For first-tier cities, the price rose fast after the financial crisis and became relatively stable, and disposable income went up too. However, the purchase power seemed to be lower. The housing price to income ratio in the 4 cities can be seen in the graph, as they increased rapidly during the 10 years, especially in Shenzhen, from 5 to 20. The ratio in Beijing and Guangzhou also doubled. That means most people cannot afford to buy, and a bubble in house market existed. Besides, the ratio for some second-tier cities also reached 10 to 15, some even higher than the ratio of London and New York City. Now let's compare the price trend of China and Japan. The price trend of the whole country level and first-tier cities in China resembles that of Japan in 1980s, just before the peak. One thing is that when people borrow more and spend larger proportion of income on house rather than other goods or services, the consumption is not in a real increase. However, some small cities were experiencing a devaluation of property. After financial crisis, to hit property economy, more people invest rapidly in building house due to the incorrect estimation of population growth and city expansion. But however, after 2011, housing price started to drop as demand went down due to the aging problem and population outflow of small cities. With overinvestment and oversupply, the house seems to be devalued in some third-tier cities. As Chinese economy between 2003 and 2014 followed the same trend of Japan in 1980s, we conclude that the overheated economy in China is similar to the booming of Japan's economic bubbles. And that's all about our presentation. Thanks for your listening.